Have you ever felt like the stock market is just a game for the rich? Or that every time you invest, you somehow buy at the top and sell at the bottom? You're not alone. Every beginner goes through the same frustration, watching others make money while your portfolio bleeds red. But here's the truth. It's not luck. It's not timing. It's about avoiding a few deadly mistakes that 90% of beginners make without even realizing it. In this video, I'll walk you through the 5 biggest mistakes beginners make in the stock market, and more importantly, how to avoid them. Because if you can simply stop doing these things, you're already ahead of most investors out there. Most beginners enter the market with one dream: to get rich fast. They see stories on social media. Someone turned $1,000 into $100,000 trading Tesla or Bitcoin, and think, I can do that too. But the truth is, the stock market rewards patience, not speed. Those who chase quick profits often end up gambling, not investing. They buy hot stocks after a big rally, expecting it to go even higher, and then it crashes. Think of it like this. If everyone already knows about a stock's success, that success is already priced in. You're not early, you're late. The mindset you need is different. Stop thinking about trading for a day, start thinking about investing for a decade. The wealthiest investors, Warren Buffett, Charlie Munger, even modern investors like Cathie Wood, all made their fortune by holding strong businesses for years, not weeks. So next time you feel that FOMO, that fear of missing out, pause. Ask yourself, would I still want to own this company if the market closed for 5 years? If the answer is no, then it's not an investment. It's a bet. Another major problem is that beginners rarely have a clear plan. They buy stocks randomly. Maybe a friend recommended it, maybe it's trending on Reddit, or maybe it just looks cheap. But investing without a plan is like getting on a plane without knowing your destination. You need a strategy. Before you buy a single stock, you should be able to answer 3 questions. Why am I buying this stock? At what price will I add more or sell? How does this fit into my overall portfolio? If you don't know, then you're not investing, you're guessing. The solution is simple. Write down your plan. Create an investing journal or a spreadsheet. When you buy something, note the reason why. Maybe you believe in the company's growth, its dividend, or its market advantage. Then, set your exit rules. For example, if fundamentals change or the stock drops 20% because of internal issues, I'll reevaluate. This simple habit can save you thousands of dollars and emotional stress. Fear and greed. These 2 emotions destroy more portfolios than any market crash ever could. When the market rises, greed whispers, buy more. You're missing out. When it falls, fear screams, sell everything before it's too late. And so people buy high and sell low, the exact opposite of what they should do. To be a successful investor, you have to control your emotions better than you control your portfolio. Markets will always go up and down, but your reactions determine your results. Before making any move, ask yourself, am I doing this because of logic or because of emotion? Another method is automating your investments. Set up a monthly automatic buy plan, same amount, same day. It removes emotions from the process and lets you benefit from dollar-cost averaging. Remember, your greatest edge as an investor is emotional discipline, not intelligence. Another deadly mistake beginners make is ignoring risk management. They think making money is about finding the next big stock, but pros know it's about protecting your capital first. Even the best investors are wrong a lot. What separates them from the rest is that when they're wrong, they don't lose everything. Most beginners put too much money into one stock or one idea. They might invest half their savings into Tesla or a trending tech stock, thinking it's a sure thing. But there's no such thing in the market. To avoid disaster, follow one golden rule. Never risk more than you can afford to lose. Diversify across different sectors: tech, healthcare, consumer goods, energy, and keep a portion in cash for flexibility. Another tip, use stop-loss or alert systems. They're not perfect, but they help prevent small losses from turning into big ones. Think of it like wearing a seatbelt. You don't wear it because you expect to crash. You wear it in case you do. But maybe the biggest mistake of all is not investing in yourself first. People spend hours watching stock tips on YouTube or reading hot predictions, but they rarely take time to truly educate themselves about how the market works. They want to make money before understanding the game. But here's the secret. The more you learn, the more you earn. Study how compound interest works. Learn to read financial statements. Understand market cycles, risk, and valuation. These are not secrets, they're skills. And once you have them, nobody can take them away from you. You can lose money in a bad trade, but you'll never lose the knowledge you gain from experience. If you invest $100 in your education, books, courses, mentorship, that can return 1,000 times more than any stock ever could. So before you put money into a company, put it into your brain first. That's the ultimate long-term investment. And here's a bonus truth. Most beginners think short-term in a long-term game. Let's be honest, the market can be boring. You don't see big changes every day, and it can feel slow compared to crypto or flashy day trading videos online. But the truth is, the market rewards patience, not excitement. If you check your portfolio every day, you'll constantly feel anxious. But if you zoom out, months, years, you'll start seeing the real power of compounding and growth. Remember, investing is not about timing the market. It's about time in the market. Every successful investor started small, stayed consistent, and kept learning. So let's recap. Don't chase quick profits. Always have a plan. Control your emotions. Manage your risks. And invest in yourself first. If you can master just these 5 lessons, you'll already be doing better than most beginners, and even some so-called experts. The stock market isn't a place to get rich overnight. It's a place to build wealth slowly, intelligently, and consistently. So don't rush. Don't panic. Focus on learning, improving, and staying disciplined, because that's how real investors win. And if you found this video helpful, make sure to like it, subscribe, and share it with someone who's just starting out, because the best way to grow your wealth is to grow together.